Let's get talking on the FMCG space then. We have Anand Mour, Head of Research at ICICI Securities, joining in from the sidelines of the ICICI Securities Conference. Anand, hi. Thank you very much for taking the time out. First, wanted to start by asking you about Asian Paints. That stock is at a record high. Do you look at that stock and do you think that there's further upside or valuations are just too rich?
Structurally, the paints as a space is definitely going to gain in the country. But the valuation comfort definitely is what discomforts the investors for the further add in this space. Last 2 quarters, if you were to look at the kind of volume growth the whole lot of paint companies have showcased, it's really surprising. So we are building in about 12%, 14% kind of volume growth even in FY17 for the paint companies. But still, we are not comfortable with the valuations. We have hold rating on Asian Paints as of now.
Anand, hi, morning. The stock that finally moved was ITC after a bout of underperformance, a long bout of underperformance. Do you see that underperformance ending now for good? And do you see the stock headed higher?
Yeah, that's one of our top pick in the space. If you were to look at the concerns for the investors on ITC was hovering around first on the volume. The volume decline in the space over the last 4-6 quarters has been pretty high, unprecedented. The shift from legitimate cigarette industry to contraband was driving that, as well as the higher excise hike. That's something for the Q4 we have seen the volume stabilizing. So I think that part of the concern should be behind. In FY17, we look at the volume growth being there in each of the coming quarters. The second concern which the investors have had on ITC was the single-digit PBIT growth. Again, Q4 showcased the return of double-digit PBIT growth in cigarettes, and we believe that FY17 should see as a whole double-digit PBIT growth in cigarettes. The third concern which investors continue to have is with regards to GST and the sin tax. We believe that the noises around GST and sin tax will continue to be there till the time it is implemented. But don't see that much of a concern for ITC and expect that ITC should outperform in FY17.
Well, the big interesting story, obviously, Anand, is what's happening with Colgate. While the street was enthused with the volume growth of around 4% that it reported yesterday, there's competition in the wings for Colgate. So what is your estimate for volume growth in FY17 and target price as well?
Yeah, I mean, over there, across the board, the staples, we have to look at the fifth P of Indian FMCG companies, that's Patanjali. Yes, it's after a long time we have seen Colgate losing market share in toothpaste. But despite that, one has to look at that the Q4, there is a revival on volume growth. What impacted Colgate, not just Patanjali, but also the overall slowdown. One has to look at that over the last, if one were to look at last decade, Colgate's volume growth was driven by increase in penetration in the rural areas. That's rural slowdown clearly has impacted that driver of growth for Colgate in FY16 beside the Patanjali impact. So we believe that FY17 Colgate should see the volume growth coming back to 6% and that should drive the revenue growth at about 10-10.5% over the next 2 years, while the earnings should grow at about 14-15%. And we have an ad rating on the stock. I believe that that's more of a non-consensus call. And I think at every deep, we will like to add on Colgate, primarily because the revival is visible in Q4. Not many companies have shown the revival in terms of volume growth. And we don't see many companies reporting revival, at least for the next 2 quarters. So in that stance, Colgate definitely has shown commendable performance in Q4.
Okay, fair enough. On that